interesting panels in terms of the community because it's called Portfolio Insights, the second act, families with successful exits and what they're investing and building now. When we're discussing about this panel, probably the majority of families of the community could be here because a family office is formed based on a liquidity event, a successful exit, and then based on that, you start with a new venture based on investment appetite and dedicating not only resources but time. And we have four very interesting stories. And I would like to start. Let's start in order, just not to be um, choosing anybody. And the idea first is that each of you share a bit of, let's call it the first act, the liquidity event, and then in the second part, what we will be sharing is the second act. What are you doing now? Why, as I said, why did you invest resources? And of course, why are you dedicating time for what you're doing? So let's start with you, Salvador.
Welcome. Thank you, thank you for the invitation. So it was a pleasure to be here and meeting great people. So my name is Salvador Dada. I'm Costa Rican. I deal in medical devices for more than 20 years. Clearly, very differently from the previous panel where we're not in fintech, we're in medical devices. So it's a different world. But we were talking to Uwe yesterday that they have the similarities of being very heavily regulated, right? So there are some stuff that there's some things that we share. But anyway, so our first company, if I can say that, it was founded in 2009. It's a medical device company in women's health, specifically in breast health. So the company makes silicone breast implants and tissue expanders for mastectomy procedures. The company is called Establishment Labs, and the main brand is called Motiva. I'm one of the founding members, along with my brother here, Roberto Meserville, who's CTO of the company still. And it was difficult at the beginning because Costa Rica, it was the first medical device company in the country. And it was so new, let's say, this type of things, that when we wanted to register products outside of the country, the Ministry of Health wouldn't give us a free sale certificate because there were no other medical device companies. So there was no, origin of any of this type of devices. So we needed to change the regulation. That was the challenge, the first challenge that we had. We couldn't even register outside. And so that was one. But after that, we started growing. And one of the main mistakes we did is that we didn't search for capital soon.
Yeah.
So we struggled a lot during the first years. A lot of turnover from people, and at some point we couldn't pay ourselves for a few months' salaries. Had to borrow money from my wife, could pay employees. I mean, like, it was crazy. But we kept going at it. It's Some say I stole it, but no. Some say
I would pay her back. Sorry.
no, but it was like that. It was a lot of struggle, and really, this is true story. At some point, we had to tell employees, you need to bring your own toilet paper because we cannot pay the. That's It was absolutely ridiculous, and so it was very tough because we had to convince the employees that we're the company that they needed to stay, that we were going to make it, right? And the founder, Jose Chacolquiros, he always had this, idea that, we were going to make it no matter what. And so it was interesting because you learn grit, right? You learn how to continue and, especially create loyalty from employees. So anyway, we struggled. We went to every family office in the country, in Costa Rica. And it was like, I remember perfectly because they were like, we didn't know this existed here. It's incredible. We're so proud. This is a Costa Rican company, great technology, but we cannot invest in venture like this. Costa Rica is not, we still don't have that hub. Now it's a little bit more developed, but back then it was zero. And so we struggled a lot until we found our dear friend Roberto. Roberto Ponce is the managing director for Event Master. It's about another stuff, but back then he only had that. And and he helped us with some fund that, we were able to pay some debt that we had. We owed everyone, so it was difficult. We didn't know if at some point it was going to be the Ministry of Health that was gonna close us, or the Caja, or all of these entities that we owe money. So we were able to, with the money that Roberto and his LPs were able to put in the company. It was not that much money. It was about $3.5 million. But that helped us. We had a great 2014, and so in 2015 we did go to a banker in the U.S., and so we went to capital markets here in the United States. Everything changed from there. We found an investor, and that changed stuff. We raised about 27 million. We built a new facility. So it was not about the product. It was not about the value proposition. It was not about the brand. It was always about working capital. We didn't have that. And so we learned our lesson, and we decided to go into the United States. And to enter the United States, we need to do a clinical study. And the whole process will take you around 6 to 7 years. And it will cost about $40 million. And so we didn't have the money, in our profits to be able to pay for it. So we decided to go public. And for a Costa Rican company to become public is a real pain, because we are not used to this. There's no public markets. There are public markets in Costa Rica, but there's like 7 companies. It's minute. It's ridiculous. I mean, we don't have that education that you guys have here in the United States or in Europe. And so for us was difficult. It was a cultural shift. We had to hire people from abroad. So we really, really became a global company with, culture changes and procedures and stuff. So it was another challenge. But fortunately, in July 2018, we became public very successfully. We had an oversubscription of 7x, I think it was, from the money we were looking for.
Public in NASDAQ, NASDAQ, to be clear.
Yeah, we went public in NASDAQ because it is a technology company. We are the innovators of our industry, and that changed everything for us. Not only from personal standpoint, but for the company. Now we had funds to actually, being able to develop all the stuff that we want, all the crazy things that Roberto and the team at RDI do, and then we enter about a year and a half ago. I think it was October 2024 in the United States. And in the first year, we took 20% of the market. It was absolutely crazy. So, yeah, that's kind of the story, but we still managed the company. But the fact that we went public was the first Costa Rican company that go into NASDAQ. It was super interesting. We were very proud of it. It's very difficult. I mean, again, it's a different type of experience. But yeah, that's our story.
Oh, amazing. Thank you. Now, Nico, let's go with your first act. Your Miami.This.
Hello. Hi. Pleasure meeting you all. I know some. So I'm a second generation in our what we built as our family office. We're from Colombia, but we're investing within Colombia or Latam and the US. Our end goal, or right now, how we've understood is Latam is really traditional, and they maintain a little position within the operational business they built. So when they grow or they start scaling, they reinvest within their own business. And that actually is a little bit of a hinder when they start thinking of expanding or growing or investing outside their own countries. So in our case, what we built within our family office is we started working with multifamily offices and understanding the market outside Colombia. So we've been a little bit risk averse at the beginning. It took us many years. My father was really a serial entrepreneur. So he built his wealth with blood and sweat, and my mom, she's back there. But what they built led us to understand that we're not focusing in creating more investment and taking a lot of risk, rather focusing on more of wealth preservation and understanding how to invest and invest in different markets. And so within that idea, we've also started evaluating and having a little bit more of a stronger position in South America. When we evaluate, we see different potentials and see how we can actually do a little bit of risk averse, but having the possibility of something that might change within each opportunity. But well, I'll keep it a little bit shorter. But yeah, yeah.
Thank you. And now, Andres, why don't you tell us about the first act and the liquidity event on your case?
Sure, thank you. Well, my name is Andres Abnetband. Maybe my story is a bit different, not as fun as yours. Well, sport area violence. But I come from not only a family, but from a culture of entrepreneurship. My first act is I might say is like a split between building my expertise in the corporate world, which I think is pretty rich and is pretty interesting when you come from a more entrepreneurial family to have experience to learn different things in the corporate world. I think I value that a lot. That allowed me to see things, let's say, in a more structured way and looking for, let's say, better upsides on the operational side, which I think you had, Adrian, asked a question about pricing. Usually we underperform productivity in Latin America. So that represents a discount for the buyers around 2.8x in the mid-market segment. And usually that represents also a good upside for investors. But that's because we're not so operationally, robust as other markets. So basically at some point, I decided that we were going to put all this entrepreneurial expertise into operation. And I was helping my father, who was a textile entrepreneur back then, okay? But when our countries, Latin America, we're from Chile, they opened to the Chinese market. Basically, it was impossible to compete in the textile industry. So I saw that my father had to reinvent himself. And I was always very connected to technology. So we said, why don't we, because we're good operators, why don't we just buy a company which is basically a swamp, not doing very well, and we see how we can improve that. So long story short, we bought a diagnostics and biotech company on 2003. That company was losing about $1.2 million a year. And we operated the company and sold it for, let's say, a reasonable amount in 2020 in the peak of COVID, because we were handling pretty much 67% of the PCR technologies in the country, plus other technologies, which was basically a reward after a lifetime of investing and making the business grow. The old school way, let's say. Okay, not so startup-y. In the meantime, one of our angles was to build the reputation that we were easy to integrate. We were looking to look like a company that was going to be easy to integrate. I was lucky to work in consulting before, so I worked in the synergy plans and the post-merger integration of two large public companies, which is, as you might think, they plan that the synergies are 10, usually they're 2. So you lose a lot of value in the integration process. So all of my experience was, after seeing so much value being lost in that stage after being acquired, I thought that I was going to do something different. So I prepared the company for 4 years to make sure it was going to look beautiful from the buyer's perspective. So one of those stages was for me to get out of the business, because no one wants to buy a business with the family inside, right? So we did that, and in the meantime of this process where I remained at the board, I decided that I was going to follow my own dream, which was building something in the technology space. So in 2016, I built one of the first solely focused on the cloud technology AI companies in South America, which was an amazing ride, but very short, because in 2018, I sold the company to a Canadian company, because they were looking for inorganic growth to land their AI operations in South America. So that made me kind of young veteran in the entrepreneurial space with 2 exits, and that opened my mind because I was never an investor, right? I still think I'm not. So I will explain that. There's a second chapter later, but this is how I closed my first chapter and I had successful exits.
Amazing. And John, can you tell us your first chapter or act, please?
Yeah, happy to. So, do I need a sports jacket to talk though, or am I okay?
Just borrow mine.
So, I like to tell people I'm a chicken farmer from Connecticut, but we do have a farm there. We do have chickens, but it's small. People come by them. But what I really did when I got out of college, I started a internet company and focused on schools around the world. So we ended up, the company name is Final Site. You can check it out. It's finalsite.com. And we started going after independent schools in the US and international schools around the world. And we built that out. I ran it. I was CEO. I was founder for 12 years. And then 2011, we sold it to Spectrum Equity Group out of San Francisco. They own SurveyMonkey, Ancestry.com. So I was like, you want me to stay on as CEO? I took a payment out, but I was like, I'll stay on as CEO if you want me to. And so I ended up working with Spectrum Equity for 5.5 years, got them a 4x return plus that, and we sold again. And we ended up doubling down. So the function we did in tech was we built the websites for schools. That was like our primary thing, but we added more and more functionality on as we went. We had admission software, so you could apply to the school. You could do fundraising. We had athletics management. We kept adding more and more modules on, and then more and more schools. So we ended up, Spectrum Equity, we grew it up. We're now in the hundreds of millions of dollars at this point. And we're like, let's sell it again. Another equity firm came in, Bridge Growth Partners out of New York City, boutique equity firm, really strong in software, purchased us. And I was like, hey, do you guys want me to stay on or I'll go? And they're like, stay on. So I'm like, all right, I'll stay on. They give me a bunch of equity back. I get a payout. I invest in other things. We'll talk about second act, but I've had two of those. So I'm with Bridge Growth Partners. I run it for 6 years. We sell again. And Veritas Capital out of New York City purchases us. And got a payout again. I was like, this is pretty cool. I'm like, you want me to say? They're like, yeah, we want you to say. I'm like, I'll say. They gave me more equity, and I was like, let's run it again. So I ran it for 3 years. Last year, I stepped down as CEO. I ran it for 27 years. Our valuation when I left, so this is not what this is for. I left. I finally left. After 27 years, we were about 1.5 billion of enterprise value. And we had 7,000 clients around the world. We were in 120 countries. Most of the schools that you guys went to, depending on where you're from, they were appliance by now. So I really doubled down on education, technology, marketing, and all the functions that run international schools, independent schools in the U.S., charter schools, and public school districts. To give you an idea, when I left, we had LA Unified. They signed like a $50 million contract with us just to send out text messages and phone messages to the constituents. But they have it's the largest public school district in the United States. They're serving thousands of kids. But what I did is I really focused on the tech side and kept growing it as time went on. But I worked with lots of equity firms and bankers. I think now I've worked with 100 different equity firms in my run, bankers all throughout New York City and around the world. And part of the reason I met Sergio is I went to Costa Rica, and during COVID, I was like, we're never going back to the office. I found a villa. I built it out and techified it. basically got Starlink in there, put a conference room, put desks in every room. And I sent down 100 people a year from our company to work abroad in Costa Rica. And they could go down there to work 6 hours a day. I'm not sure they got it all in, but that was the goal. But we really wanted to tie in the culture, because once you become a remote company, you need to get people together and do that. So anyways, I'll get to the second act, but that was the first act. And the second act's actually even more exciting.
No, absolutely. Thank you. And, something that is important is to know a bit of the background of the members. And I'm really excited that they share what we're calling the second act, because once you have an exit with all the mistakes, challenges, everything, of course, you learn. Is sometimes, like I call it, the most expensive MBA of the world, but you end up learning, and you're better for the next challenge in case you keep entrepreneurial. So let's start with you again, Salvador, sure, and let us know why and what are you doing, why are you investing money, why are you investing time, and share us your vision.
Sure, thank you. So once we became public, right, we're all excited, and there's all these things that now the company can do. We were not able to sell shares. So not totally treated to Epais. If you are a Section 16 officer, you have to sign a 10b5-1 plan, which is basically an automated selling portfolio. So we did that, and in around 2020, kind of the share went up, it kicked in. So now we had in my case, I had with my wife a little bit of money, and we said, okay, now we're gonna invest. We're gonna have our own, small family office. And I learned that I'm not good at it. Okay, let's put it that way. We've been investing in certain. In reality, what we wanted is to invest in small Costa Rican companies, right? Like pay forward. Like there's a lot of entrepreneurs that, us, we didn't find any Costa Rica, one family that invested in us, but we didn't find any, major Costa Ricans investing in us. So I said, okay, maybe we can help out this small company. So we did a few deals. I've shared with the Roberto Fe some investments in surfing companies that went really bad, and it is what it is. So what I learned is that I'm an operator at heart. What I could do is help build a good team and run a company. With the help of a team, and that's what I do, right? And so in 2021, I was diagnosed with a heart arrhythmia. So my cardiologist said, if you don't change your lifestyle, working with ESTA, you're gonna die in 10 years or something like that, something very miserable. So I said, okay, I resigned to my position, and then I had a little bit more time. Still needed to find out what to do and how to waste money, because we were losing money in a bunch of these small investments. And then my dear friend Marcos Sforza, he's one of the greatest plastic surgeons in the world, by the way. And he was one of the main key opinion leaders for Stalbino Labs. He helped us put the brand in Europe, and he ran the medical education program back then. And so he approached me and said, Sawa, I've been talking to my friend who's a neurologist, and he says that there's a very similar story in urology than in breast implants when you guys started in 2009. Basically, there's two main companies that have products. They haven't innovated in 30 years, and there's a lot of complications around them. So we need to solve this. And he goes like, if you want to explore this, do this. And again, because I already decided that I'm not good at investing, I'm good at operating. So we decided to give it a shot. With him and this urologist, they devised this new technology to cure urinary incontinence and ED. And so we said, okay, let's try out. Let's do some prototypes and see if it works. Let's do a cadaver workshop, and that's how we did it. And the opportunity is because recently prosthetic cancer in men has grown a lot, and now the chances of getting prosthetic cancer is 1 in 8. Very similar to breast cancer, which is really bad. And the age went from 68 to 58. So now you have 50-year-olds with prosthetic cancer. They need to do a prostatectomy, and then 40% of these men will end up either with erectile dysfunction, subsorted erectile dysfunction, or urinary leaks. And it's really sad. At the beginning, it was like, okay, how big is the market, or how is this, or how is that. But the reality is that if you talk to the doctors and if you talk to patients and you see the testimonials, is really bad. They get depressed. There's a small percentage of suicide, which it shouldn't happen, And the reality is that the solutions that are in the market right now, they're not really good. So we set up to do this, innovating in these devices, and that's where we're at right now. So I stopped investing fully in our company. We're investing in our company, in ourselves, that we are able to do again. Maybe do another Establishment Labs. Establishment Labs was the first unicorn in Costa Rica. It's the first billion-dollar company. Today is about 2.2 billion. So it's done really good. And now we can do it. We have the chance to do it with all the lesson learns and all the stuff that we fail at some point. That we learn. I would say learn, not fail, but learn. As you were saying before, right? And so that's where we're at right now, basically.
Thank you. Nico, please tell us about your second act right now.
Well, before that, I'll say a little bit of 1.5, chapter 1.5. Then maybe I cut it a little bit short compared to the others. But within the family structure we created, it actually allowed us to have time to start visualizing, seeing the sense that like all of them here are entrepreneurs. I myself as well, start expanding, understanding that I had the entrepreneur blood. So I wanted to also bring it to the table. With the time we had, with the family office, we go through a process of doing it through an investment committee. It gave us ample time to actually start studying and understanding different markets. And within and having access to financial institutions, we understood that there's a really large gap when it comes down to remesas, cross-border payments. So with the cross-border payments, I also launched a company. My partner is sitting in the back. But we launched a cross-border payment system that understood that there's a lack in the communication, let's call it, between what is the user and the end reason why they're sending the money. It doesn't just happen for our scenario, Colombia, but we saw it happening around the world. Most people, they're sending money to pay a specific reason or home expense or support family that they're working from abroad. So we understood, having all this access to information, that there was a gap, and as it's becoming more tokenized, and with the Clarity Act that's going to be creating a tax for any cross-border payment, we connected and bridged that fraction. So we understood within the market that it's easier to connect to the final reason you're sending the money, and empower and give control to the person. And so I myself became an entrepreneur as well. We've been working on this for the past 2 years. We're not in a $1 billion state yet, but the idea is working on creating these connections and understanding that the market, how in the fraction it can be solidified, and it can be a support to within the customer or the end reason they're working to send the money abroad. So that gave us an opportunity. Well, I added a little bit of chapter 2 as well there. But overall, where we're standing today, it's understanding that how it all connects within the family business, understanding the entrepreneurship side, and then making a connection within that allowed me to actually do what I'm doing today to get us.
Great. Andres, what are you doing right now?
Now I'm sharing here with my friends. And this is what you do after an exit, right? Like, just share with your friends, right? No. Well, it's been a journey. My second act, it's first, I think, is the first stage of the imposter syndrome of I've been an entrepreneur my whole life. Now I have cash. Am I an investor? The answer is probably no. Usually you realize that you're not an investor until you need to become one. So that changes your perspective. I think anyone that actually is now an investor but comes from entrepreneurship will empathize with this feeling, right? Which is all of my equity was on a business. Now I need to manage cash. So what is my purpose? What do I do? What am I actually good at? I am actually good at this. So my second act is related with that, like, let's say, emotional process of looking for myself and looking what I actually bring to the table. And I realized when I was trying to build my personal portfolio, these classic meetings with bankers around, buy some Blackstone, funds, buy. And I realized that my major expertise was around looking for value in angles and in industries that was a little bit out of the box. And then I realized what I actually want to do with my life. So my first instinct was to become an LP in some funds, which I am until today. I'm a quiet LP in 3 different VC funds and one specific family office where we joint ventured some capital for specific portfolio and some personal investments. But this is the boring part. Like the I think the good stuff is when I think about what can I actually bring and what my angle is good for. So I realized that when I was in the process of trying to sell my company, I come from South America, which is not as mature as a developed country like the US or some countries in Europe. So when you have a nice company, right, and you want to do something about it, there's almost no one that can help you with your exit strategy. You think about entrepreneurs and many family companies in Latam, they don't have a culture around how do I exit my business? Is my company worthy of being bought by a fund? Is there any chance for me to have a liquidity event? Many companies that they have, revenues of $50 million, $60 million less, within the evaluation of 100 and less, they don't add even an option to be exposed to global capital. So I thought, what I'm good at and what should I do? And I decided that I was going to dedicate my life to help companies find their way to an exit, make founders wealthy, make our countries generate cash, flows in the region by making more entrepreneurs and more families wealthy by helping them get liquidity events.
It's like the last mile, right?
Exactly. It's basically the last mile of entrepreneurship and also helping new family businesses, new family offices that they have venture capital investments, help them make their portfolios that are aging a little bit, getting the liquidity that they expect to respond to their investors. So basically now and there's my partner, David, we build an M&A. We call it a founder-led M&A boutique. We focus on mid-market deals, so valuations probably less. I still get some larger, but less than $100 billion. And we try as a purpose to help Latin American founders and families to increase their chances of having a liquidity event and helping funds approach the Latin American market in a more connected way with companies that are in the mid-market space. So our boutique is now representing funds like yours. It's representing companies like probably the ones that you had in the past and helping these founders and these families and these persons to, accomplish their dreams, give stability and generational wealth to their families, and bring this value to our countries to help our economies to thrive and to generate more capital and generate development. So my mission is in that space. It's not in the investment place, but I realized that our expertise to look for this specific value on high tech, on health tech, allow us to generate more economic value than from the investment side. So this is where we are.
Great. What about you, John?
So I stepped down a year ago. So the past year we built a new house. So I decided to I want to try this. So we built a modern farmhouse. So that was like an adventure in itself. But really, since I sold the company 15 years ago, 6 years ago, I've had a couple liquidity events along the way. And I basically split my time. I have a nonprofit called Global Pathways. And I took half of my time, and even today, and the first thing I did is I worked in education for so many years. And I'm like, I want to give back to the world the best I can. And so I built a Bible app. So you can go into this app. It's called GP Bible. And it has a companion in there. Because the Bible is really hard. If I said, hey, do you want to go read the Bible, whether it's the King James version of the Bible or whatever version of the Bible you want to read, it's really hard to understand if you first get in and start reading. So we built a companion that can help you learn the Bible and ask any question you want. It's called GP Bible. And we're very close to launching an online school. And that online school is going to be going live here. And it's in Spanish. We worked with a Peruvian group to help us build it all out. And then I'm heading to Costa Rica. We're buying some land and we're putting up a school in Costa Rica where all three of these can work together to help people around the world that are underprivileged or do not have the ability to get a good education so they can get into a university somewhere if that's a goal. So I've really focused and double clicked on education to really help people grow, but from an online school to a Bible app to immersion program in Costa Rica. So that's my philanthropic side. That's my passion project. For the rest of my life, I hope I can spend time there and really build that out. On the other side, I want to pat this guy in the back. I like what he's doing because I have sold my company multiple times. I presented to many equity firms. Like if you said to me, hey, give me an equity firm that would be a good fit for my culture of my company. Like I've met with them. I know culture of equity firms and many of them I've worked with. I can tell you like this company's better. Who are you looking for an investment banker? Like who's a good investment banker to go with? So I work with lots of CEOs. I set up Moser Capital Partners. And I work with lots of CEOs of companies or people who are looking to sell because I've sold my company literally 3 times and had huge exits with each one. And we did like 25 times EBITDA exits on many of them. So there is a way when you go in and you're taking your SaaS, if you have SaaS, it's a SaaS company. I know it's getting a bad hit right now. But the ones that are getting hit are the ones that haven't AI-ified in a lot of ways. If they have really built out their AI, their actually growth is going to go exponential. But if you figure out like long-term agreements and you figure out how you sell your software. So I've really focused in there. So I'm helping lots of companies. And then what I like to do is we're all not going to be like perfect investors, but I like to invest in the companies that I help. So I'll get on the board or I'll be an advisor and I'll help them as part of the deal. And those ranges are very largely, right? Could be really small to a large entry, or I take equity in the company and just help them work towards the exit. But I like it if they're within 2 years of selling and anything in software and tech. Since I worked in education technology and I was really connected all over the world, I'm actually starting up a company this month. We're launching it. You guys are kind of the first to hear. It's called EBU.studio. You can't find it yet, but it's agentic AI for schools. So basically, we will have agents that will work with a head of school, with the fundraising director, and it goes in. And our goal is to give you your Fridays back. And we'll help you become more proficient at your job. We're looking at 30% efficiency for everyone to give them, like, just help them do little tasks that they had to do themselves before, but really working on that. So I'm really in the technology space, still got a lot of energy left and a lot of people who want to do things. So I have big networks of people, especially in tech, and continue to build that out. So the second act is actually, to me, just as exciting as the first act, but since you've already done it, you can move so much faster and you know what to do and not do. I think everyone can relate to that along the way here. So, and I'm at these events here. I have my own family office, and this is just a good group to network with, from tech to like just simple conversations. I'm big into Bitcoin. I've done a lot in the crypto markets over the years. So I kind of in the fintech side, but I'm on both sides of things. So that's kind of my play, and love to share and help people where we can.
No, this is amazing. I would like to open the conversation if someone has a comment, questions, whatever, to some of the participants.
How do you end up in Costa Rica? I actually was going on vacation with my family. I have 5 kids. My wife's back there. And I was like, let's get out of Dodge. It's COVID. And we went down to Costa Rica. We stayed in this hotel, and there was only 2 families there, and it was over Christmas. And we're like, something's wrong. We missed the memo. I'm joking. But we were in Costa Rica, and I found a place there. But someone asked me this earlier. So I have very strong Swiss-German roots. So if I go back to Switzerland to Bern, my executive function's really high. I like things in order. Some people call it OCD. I call it being Swiss. So someone told me along the way that Costa Rica is little Switzerland of Latin America. Bucero. You don't know, really. And I was like, I always wanted to say, like, La Suiza Centroamericana. La Suiza Centroamericana. It is, yeah. So you guys all can debate that later, but it got me. And I'm like, I'm going. And I found a villa down there I really liked it. I actually worked with Antonio here. He owned a tech company. And I was like, hey, do you want to offer SEO PPC services to schools all over the world? He's like, who are you? I'm like, he's like, I'll do it. So I ended up doing a lot of tech work down in Costa Rica, but had a villa in Manuel Antonio. I still have it. Actually, I'm trying to convince Sergio to do this next event. Had our villa in Costa Rica.
Oh, that was nice. Yeah. We can vote now.
Anyone, just raise your hand if you would go, just so he has an idea. Yeah. Just us. There you go. No, but seriously, Costa Rica came because of tech. And literally, someone whispered in my ear, it says, little Switzerland. I'm like, I'm going. Let's check out.
No, it is true, but it's more because of the geography. It's green, and it's because of.
Sorry.
Has nothing to do with orderly country.
Sir, no one's on time. Oh, see, days.
And great milk.
No artist. Salva, something that I would like to that you share, because we spend some time talking and for me understanding, but my background is in fintech technology. I had my exit and now more in the investment side. But for many of us, it's more difficult to understand probably the opportunity regarding the medical device and everything. So if you could spend some minutes explaining like the benchmark and why you see a really interesting angle there, it could be useful in the simplest possible way.
Yeah, what I would say is the medical device space has a lot of barriers of entry. So if you know how to go in, there's not going to be a lot of competition. So in our case, right now in neurology, there's 2 main companies and they're easy to disrupt. So it's easy for grabs right now. I would say also that once you're in and you've come through all the hurdles of the regulatory process, which are lengthy and expensive, and it's up to regulators, right? So we were talking yesterday that during COVID at ESTA, we were doing the final step for the clinical study. and the FDA was just, okay, we're gonna shut down. We're only gonna focus on COVID, and your file is gonna be placed on hold. China shut down the office for a year, and so no response either of our submission in China. So you do depend on regulators and their times. Even so, the FDA is slow, but they have this let's say response times in the law that they're supposed to, let's say, to respect. But so once you have all those hurdles, you are in a very good market. It's well paid, is reimbursed, mainly in the United States and European countries. So all these devices are reimbursed, so it's great. And then the gross margins are really good. So you're able to finance development and your operation. So I would say that those are the main things that there's not that many competition. If you disrupt, then you become global market leader. If you have a great gross margins and after, so it's good.
And you see a new IPO or an acquisition?
We've talked about it. I mean, if the opportunity comes about because we are taking the market and we see that we could expand to other devices or other stuff, we could do it. But this time around, because we've already done it, we think that it would be more strategic to actually sell it to one of the what they call the strategics, which is the Arthrocares and the Boston Scientifics, the Coloplast of the world, all these big medical device companies that are actually acquiring new technologies that they cannot produce because they don't have it in their, they're not nimble anymore. So they acquire these technologies. And so that would be easier. So what we were thinking right now is within 5 years, once we are in the US, that will be a much easier conversation for an exit. And yeah.
You have any comment or?
Yeah, I want to say that because people sometimes think in medical devices, the opportunities are small. But for example, I want to say I joined Establishment Labs in 2013 at a $5 million evaluation. Today, it's $2.2 billion. So it's the market cap of the company. So it's not that there is little value. I think exactly what Salvador says. When you break in, the multipliers are incredible and really, really fast because there is no competition, right? And the second thing is that never do an IPO. If you can survive without having an IPO, that's amazing. Because the only reason someone should do IPO if they stop having any access to cash, then it changes the game. But if you keep having access, keep it private, you can control so much better. Otherwise, you become an elephant. And what happens in medical devices today is exactly this. None of the top 10 biggest medical device company in the world are developing anything. They're just buying innovation. They're not doing any new products. They find the next company that did something amazing and they do a deal and they incorporate. So that's the problem of the
structure acquisitions. We learned that.
Yeah.
If we decide they see you early and they say, okay, we're going to set for 300 million and we're going to give you now 20 and then we're going to give you payouts. But maybe if you run it for 3 years, if you had the capital and you run it for 3 years, then the valuation would be 500 or 600. I don't know. But this is what the founders need to decide if you want a strategy early on or you want it later, right? So in our case, because we know how to do it, we know how to take the market, I think we want to wait until it's mature enough to have enough value for us and for the shareholders that we had.
It's probably worth just quickly mentioning the gentleman over there, James, in case, sorry to put you in the spot, right? In terms of creative financing solutions, speak to James.
Nice. Yeah, we talked yesterday a lot.
Not about business, but we're recommending some, or having some.
You're convincing him of having children. They have to do a prenup every single vendor there is and is that.
Did you say propose that, please?
If there's any comment, question, just raise your hand. Yes, Lana.
I'm just curious. So you guys creators and builders, and then when you exited, you made cash, and you found yourself not a very good investor. And I'd like to know, why do you think you not still invest? Because you built business, you learned your lesson, you exited, you know what success and what success looks like, what's the challenges inside the organization, then in hindsight, you should be a perfect investor because you know all the problems.
Yes, such a good question. I mean, I think, yeah, it's a very good question. I think the answer is that you're right. Maybe it sounded like it was too hard on myself, maybe talking about the impact of changing your perception of yourself, right? Once you're an entrepreneur or you operate and then you get the cash. The truth is that in my specific case, it was about acknowledging where I can actually pull through the extraction of value, right? Classic investment, stereotype is I can read market patterns, assets, and understand whether it makes sense with my risk appetite and so on. So in my specific case, I'm a good investor in the context of specific vertical expertise around specific industries. So let me put it this way. I'm not a good investor when I check the market and I see all the financials because it's not my language. But for example, the day, I don't want to sound like I'm talking too much about myself because this is like one thing that worked out, but there's many that didn't, okay? This is a good stuff. So when the day that ChatGPT was released, because I used to work in technology, I said I used to work in analytics for many years. This is how I shifted to AI. So the first thing that came to my head is, who's going to process all this data? How are you going to process something like this? Like the hardware of companies, we'll have hyperscalers, the cloud providers, are going to become rich. But if you know the industry, you know that didn't work in regular hardware. It used to run on GPUs. And since I'm a bit of a geek, I use NVIDIA GPUs for gaming. So I said, you know what? I'm sure that the big winner is going to be NVIDIA. Now it sounds like everybody must. But back in 2021, I think, it wasn't so much like them. So I did my analysis and I said, I'm going to bet on two things. One, GPU, which is NVIDIA, almost the gold standard, and then the energy. So I bought energy ETFs and I bought NVIDIA stocks. My banker told me I was crazy because I bought like a huge amount of stocks in NVIDIA, so I was not like super diversified, and that stock was not recommended by it. So the lesson was that since you know the business, since you're emotionally connected with the technology, since you're connected with the links between cause and effect of some specifics, you can relate maybe faster than some other investors, so you can have a good eye on the industry that you have on your track record. So that is the same reason why I became an advisor of some family offices on the long investor, side of their portfolio. And then this is how I realized that more than an regular or trader, let's say, I'm more of an operator, so I'm more of a long-term investor. And in that space, you're absolutely right. You can bring something special to the table, because I think you need different type of investors. In my specific case, through M&A, I realized that it can bring more multiples, more value than actually putting smart money on a specific company. So,
Nico, maybe you, why following up Donna's question?
No, absolutely, and a great question. In our case, I want to say first, I think in South America, people tend to be a little bit too humble. Yeah, we don't sell ourselves. We undersell ourselves actually, really well. And I do that myself as well. But in our case, as an investor as well, so being second generation, I saw my parents build what we have today. And through the struggle and everything they did, it gave us a basis. So it actually allowed us to take a little bit of risk. The thing is, in South America, when you're investing, it actually there's so many other factors to take into consideration. Political, or it could be social, or like a president can wake up one morning and just say to Trump that he doesn't want to agree with the tariffs, and it changes completely in a second. So when we were initially evaluated, we started focusing in the U.S. because it's a safer pathway. There's a larger market. The people understand how it operates. But when we started visualizing and focusing in South America, it gave us a pathway to actually want to promote and support entrepreneurs as well. And going back to how now I'm an entrepreneur, it's funny because in my case, it shipped. So in my case now, when I'm looking to raise capital, I'm more nervous because I know what investors are looking for. And now, but at the same time, it happened for me the opposite way. So I started like second second guessing the right strategy because I knew what the type of appetite, the type of risk I was looking for. So it's interesting as the power shifts continue, and but with in South America, there's so many opportunities as well. I know that they're coming all to Miami. Miami is coming up, but it gives an ample opportunity to understand and study how investors are coexisting with new ventures and the new ventures are becoming. So it becomes a cycle of how we're experiencing, and you're reopening and doing new startups again. So and the market keeps evolving. So I think it's a never ending question to that one. But yeah.
Julian, you have wanted to add some? It's again for Nicolas. I could speak you twice. But you spoke about cross-border payments and understanding the reason why people are sending payments to LATAM. I think LATAM being but Latin families being geographically fragmented, right? There's a lot of people moving to the U.S. as opposed to U.S. people just moving across the U.S. And you mentioned it's important to understand the reason why they're sending money. Is there a specific niche or a specific sort of trend you're seeing along why people are sending money, how you can help them sort of pay easier, facilitate maybe broken infrastructures in LATAM? Place?
Absolutely. So from the market study we did, it helped us understand that that's not reality. Life in Colombia, it's a little, or in South America, it's easier, it's cheaper. You can build amazing houses at a fraction of the price it would take here in the U.S. So, like you all know, a lot of people move to the U.S. or even Europe, and they kept their families back home. In many cases, it opened a new market with the new AI movement of offering consulting from abroad. So there's been a new wave of services being offered while living abroad, but being paid here in the U.S. So with all that movement, we saw last year to South America, just in South America or Mexico downward, let's go on. More than $161 billion were moved. And that is to understand that there's always an influx of the US dollar moving around. And what's happening is how it's now becoming more digitalized in that sense. And what we are offering or how we're connecting is to simplify the process of the reason why they're doing it or why they're sending the money. So in our experience, it's a market that was on top in the sense that no one wanted to actually take the extra mile and understand the reason why people were sending the money. They just wanted to connect banks and simplify and expedite it as fast as possible. So in our case, that was the big insight or the white whale we found, and it's been able to facilitate and integrate the whole ecosystem for us. And we know that each country, even though it's an independent market, they have the same core structure and meaning that the reason why they're sending the cross-border payments.
Okay. Can I jump in for a second? Adrian, to help Nico out. One of the use cases that Nico has that I love is the ability for a real estate investor in the US where Nico can help facilitate the buying and sending of payments for mortgages, for ownership, for legal to Colombia and to other countries. And it's when we look at that 65 billion, so 65 billion just goes to Mexico alone. 150 billion personal remittances are going up by like 20% year over year. People are actually sending money to bank accounts, pay bills. The SMB portion of that is literally hard to quantify. It may be anywhere from 4 to 6x of SMB sending money. Even like real estate, that 65 billion to Mexico doesn't count. Let's say Jeff, who buys international real estate, using Nico's app to pay for the condos that he's going to buy in Colombia. And I think it facilitates, those that are in country. I think we said it really before in the last panel of having people in country to help, like Nico in Colombia, with friends to say, we're going to help you to make sure that when you do pay your mortgage, it goes to the right person. When you do pay your electric bill, your lawyer bill in Colombia, it actually lands to where you need it to go. And I think there's a massive opportunity in cross-border payments right now to be able to facilitate that SMB, to facilitate the buying of real estate, the buying of assets in LATAM as that market opens up. And we'll talk more about this on the LATAM panel at like 2-ish, 3 o'clock about where are there opportunities for investors to fund companies and opportunities across down south.
Great. Before closing, Roberto, we were discussing a bit yesterday, and you were also telling me about a really interesting, let's call it second act, that you are doing. I don't know if you would like to share it with the audience in a couple of minutes, just to give another conversation topic for lunch.
Okay, that's interesting because my investment portfolio has a lot of Bs. We started with Bitcoin and breast implants. You can use another B for breast implants. And so that give us the means to our next act, obviously because of the IPO. And I just had this fund. You had $5 million pre-money. I had $6 million pre-money. So somehow they did some weird stuff there. But I just realized, I said, oh my God, that's okay. Kind of the same day. I was with it here. Okay, it would be, it's okay. But that give us the means to and they say because nobody is servicing properly to the financial institutions that are here in South Florida. Actually, it's the whole Florida. There are 27,000 institutions in Florida, financial institutions. And big banks are not servicing quite well. There are 80 crypto companies, about 400 money services, business payment services. So I said, oh, you're doing a bank. Yeah, it's going to be called Florida Bank. There is a Miami Bank. I said, oh, nice name. What happened if we do it first? And the regulator told, okay, be my guest. If you do it first, you will get the license of Bank of Banks. One of the first ones, Florida has the law for a Bank of Banks is that it be used. For some reason, the only banks that used to be, it was to be the Florida Bank. So they said, okay, what will be now got into another beast? It's going to be blockchain attacks. So that's kind of the second act is because they gave us the license. It's a full bank. It's not a trust bank like the last crypto banks that you have here in the news. It's a FDIC, federal account. It's a real bank of banks that will service the financial industry in Florida or across the country, basically. It will be crypto friendly, obviously, but the dream is what happened if we do start opening bank accounts for agents. Obviously, the agents are no person good. There's no legal entity. And the regulator, okay, they said, okay, is there any new law or something new that you need? So we need to give something to the agents, to the AI agents, some sort of person good so we can open a bank account for those cloud people. So that's the second act, and I think the next generation of wealth will come from the people who owns infrastructure, the people who owns all this AI. I think it's better to own than an AI company to own the infrastructure that will use that. Banking industry been for 5,000 years. Babylon's used to have banking, and it had not changed since then. So I think that could be a very interesting thing to start now. Continue with the bees,
Really, really cool. Well, and we had from school, now you have heard since the last mile, cross-border payments, and medical devices, banks, and probably there are more, but I think it's a great way to move to the launch session where we will be able to uh, discuss in more detail if you're more interested in learning more about what Salvador is doing, what Andres is doing, Nico, John, Roberto, or any of you guys, and hopefully in future events we will be able to say, hey, remember what we discussed in Miami? We were acquired, we did an IPO, whatever. So I don't know if we're ready to move.
I think we are. So we've got lunch on the fourth floor. An hour and a half. Let's try and be back here for 2:00, and then the rest of the afternoon will continue. Just to flag also, depending on the weather, if it rains or not, we've then got cocktails and canapes on the rooftop, and we'll be directed there later.
If someone don't have the yellow banner, please come, so we'll give it.